All right, thank you all for being here tonight. My name is Heather Frederick, and I'm the Assistant Director for the Center for Arkansas Farms and Food. And tonight we are talking about farm taxes. It's that time of year, so anybody who's in farming or thinking about farming, this is probably something, farm taxes is probably on your mind. The Center for Arkansas Farms and Food is an educational hub for farmers and aspiring farmers in Arkansas. We do a lot of work with beginning farmers, but we also team up with our local cooperative extension office to support established farmers as well. And tonight we have with us from the Benton and Washington County offices, extension offices, Ryan Neal and Colin Massey, and they're going to help keep an eye on the chat room for us. So for tonight's class, we're excited to also be able to partner with the University of Arkansas Agricultural and Food Law program. And I think Kelly Nichols, who's the assistant director for that program, is going to share some information about them in the chat box. But our speakers for tonight, we have Ashley Apple and Poppy Davis with us. Ashley Apple, who, along with her husband, Travis, they own and operate apple farms on the outskirts of Springdale. They grow a variety of crops, including you-pick strawberries, and they also have a farm store and a certified kitchen on their farm. Ashley has an accounting degree from California State University at San Marcos and is an EA, or enrolled agent. And because we are talking about taxes today, I have to share the disclaimer that the information presented tonight does not constitute legal or tax advice. The views and opinions expressed by the speakers are for educational purposes only. So Ashley, I am going to turn it over to you first.
Okay, let me see if I can share my screen. Okay, can you see it?
Yes, we can.
Okay. So my name is Ashley Apple. My husband and I, like Heather said, we have a farm here. We're actually in Elm Springs, right on the edge of Springdale. And we grow a variety of things. It started with strawberries about 9 years ago. And now I feel like we grow everything. So we got a lot going on. We also raise pigs. We have some cows now. We have a commercial kitchen and a little farm store. So we've got a lot going on. You didn't come to hear about me, but I'm going to give you a little bit of history anyway. So Travis and I are both from here. We're both from Springdale. He joined the Marine Corps in 2004. And we got stationed in Southern California at Camp Pendleton. We were there for 8 years, aside from him being on some deployments. But while we were there, I went to California State University and got my bachelor's degree. And then when he got out in 2012, we moved back to Arkansas. I went to work for a local firm. And he went back to the University of Arkansas to finish up his horticulture degree. While he was doing that, he decided to grow some strawberries. And then all of a sudden I was married to a farmer and we had our own little business going on. So it happened kind of quick. But I continued to work and worked for about 6 years. And as you can see in the picture, we have 3 kids. So that became a little too much. So for the last 5 years, Travis and I have just done the farm thing full time. Aside from me doing a little bit of tax and bookkeeping stuff on the side, this is the farm is our main source of income. So a lot going on, especially doing this full time. And I'm still farmer in training. I don't think I'll ever get the real title of farmer. So Travis is one of the smartest people I know. He's created this great place, great farm. Don't ever tell him that I said that. I don't ever want him to think that he's the smartest out of the both of us. He's a great farmer, but he is obviously very lucky to have me to do his record keeping and bookkeeping and all of that. Between that and collecting money from customers, that's about the only things I'm good at here at the farm. Aside from pulling weeds, I'm pretty good at that. So anyways, I will move on. First of all, what is record keeping? So I'm sure most of you know the basics. You know, you keep your receipts, you put them in a pile, and you give them to your tax guy, and you've done your part. It's actually a lot more than that, not only for a farm, but for any business. Record keeping is a very important piece of your business if you want to be able to make decisions and grow your business for sure. So just a simple definition you can see there for record keeping is keeping, filing, categorizing, and maintaining financial and production information. So most of you, if you already have a farm, you're probably already doing part of that. You're probably already keeping your records, your receipts, you're throwing them in a shoebox or whatever. You may be filing them away in file folders that are nice and organized and all that. It's the categorizing and the maintaining of the information that's the struggle for most people, especially farmers, because most farmers don't want to have anything to do with that part of the business. There's two pieces of information that you should be keeping up with. There's financial records and there's production records. So the financial records are going to be the things that have to do with the money. So your income, your expenses. So you can see there like sales, equipment purchases, accounts receivable, accounts payable, inventory, all that stuff. Anything that has to do with the money in, the money out. The production records are also a very important piece of information, and that's going to be more of like your inputs and outputs on the farm. So crop yields, planting schedules, breeding records, all that kind of stuff. Those, again, are just as important as financial records, but today I'm just going to mostly talk about financial records and the best way of keeping up with that piece of information. So why is this important? Aside from, you know, right now, the main thing that everybody can think about is tax time. We got to get all this in order and we got to give it to our tax person. Well, in order to get the tax return prepared, all of your records have to be organized and put in some sort of format to where we can see income and we can see expenses and we can push that over into a tax return. Not only do you need all of this stuff organized and maintained, but just for the tax preparation, but also for tax planning. So if you think you've had a real busy year, you know, it's November, December, you've had a super busy year and you're thinking, I'm going to owe a lot of tax, I need to do something. Well, it's going to be really hard for an accountant to do any kind of tax planning for you or with you if they don't have some records, some bookkeeping, some reports to look at to see where you're at and be able to make a decision on if you should make some kind of equipment purchase or something like that this year or wait until next year. You've got to have your records maintained and organized and categorized and all of that in order to make those kinds of decisions. And if you're ever to get audited, whether it's an IRS agent or someone from the state doing a sales tax audit, anything like that, if you have an auditor come in and they see that you are doing your best at organizing your information, keeping your books, have it all categorized, that audit's going to go way better. And it may not be as intense of a review if they can see that you're actually trying versus having a shoebox and a bunch of papers in it. You know, I touched on financial decisions. You've got to be able to make those decisions. You need to be able to pull reports. You need to have your records organized so that you can look at reports and make decisions when it comes to your business. An example for us, one thing that we grow is cherry tomatoes. And there was one year where we were getting ready to plant them and we were trying to figure out how much to plant. And we knew that we always sell a bunch of cherry tomatoes. Like people always want cherry tomatoes and it always seems like we don't ever have enough. We're always having to run down there and pick more, or we just are out for the day. Travis and I both are like, okay, well, we're selling a bunch of cherry tomatoes. Let's plant more. Well, when we look at our records, because of the way we keep our records, we're able to see exactly how much we sell in cherry tomatoes. And we can tell that, whoa, I mean, we may be selling out, but really this doesn't make any sense. We might not be making enough money in that little area. to want to grow more. Maybe we need to plant something else. But if we hadn't had our records in order, we wouldn't have been able to make that decision on the spot like we did. And that's just one little simple example. But if you don't have all of this stuff organized and maintained as you go, then it's really hard to make those decisions on the spot like that. Again, like we thought, we knew, like we're selling them, we must be making good money, but until you see that on paper, you may not get the full picture. That goes right along with the planning. You know, you need to know what to sell or what to grow for next year. Well, you need to look at your sales for the prior year, and see if it makes sense to grow more of a certain thing or less, or do you need more cows, or whatever your operation is. In order to plan, you've got to have some records and some reports to look at. Another big item, and I've had a lender say this to my face, actually in a meeting like this: if you are going to get a loan, you need to buy some equipment. Maybe your net income isn't where it needs to be. And maybe they don't typically lend money to someone that has this low of income. If they see that you have your records in order and you're organized and everything's neat and ready to go, they're going to be way more willing to lend you money, versus, again, you just having a pile of receipts and you've written down some income and some expenses on a piece of paper. Being organized and having all of that in order will make a huge difference when it comes to getting a loan. The business health and progress, that goes right along with the financial decisions and planning. You need to be regularly looking at how your business is doing. You can't do that without running some reports. You can't run those reports without maintaining your records. So you need to be doing this as you go so that you can really grow your business or know how well you're doing. I mean, maybe you're feeling like, I'm doing all of this work and I feel like I have nothing in the end. Well, you need to be able to pull a report and see where the problem is. You can't do that without keeping your records in order. So maybe I've convinced you to do a little bit of record keeping. So now you got to figure out how. I think there's several ways of doing this. There's three main ones that I touched on here. We've got the shoebox method. I gave it 1 thumbs up. I didn't really want to, but I did. We've got the spreadsheet method. So, you know, like using Excel or Google Sheets, that's probably what a lot of you would gear towards, maybe if you're familiar at least with that. And then you've got bookkeeping software. So QuickBooks, there's all kinds of different tools and software that you can use for bookkeeping. So we'll talk about the shoebox method. This is the #1 method that accountants hate. So you're keeping your records. That's great. You're keeping all your receipts, all your invoices and all of that. That's great. You're putting them in a box or maybe in some files, but they're not categorized. You're going to hand this box over, this folder over to your accountant, and they're going to have to go through and categorize everything to where they can have it in some sort of report. That's not great. We don't really want to do that method. You're doing good by keeping the records, but they're not organized or categorized or maintained really in this fashion. So I don't recommend this, but if that's what you're doing, at least you're keeping them. So maybe just tell you. Next is the spreadsheet method. So if you're familiar with Excel or Google Sheets and that's great. And if that's the method that's going to work for you, that's great. You have to figure out a method of keeping records that you'll actually do. Because if it becomes too intense or too hard or too time consuming, then you're going to end up not doing it. So you've got to choose something that you're comfortable with. And if it's a spreadsheet, that's great. At least everything is totaled. You've got your transactions in there. You can total them. If you're really good with these spreadsheets, you can form reports out of Excel. You can do all kinds of stuff in there. You can see the pros there that at least you're able to total things. You're able to potentially run some reports. And there's no cost. I mean, especially with Google Sheets, you know, you don't have a lot of software fees if you're going to do Excel or some kind of spreadsheet. And if you're a beginning farmer, like that's important. I remember when we first started our farm, I used Excel in the beginning. I mean, we had very little going on, so it was easy to run that all through Excel and total it and know where we were at. And we didn't have any sort of software fees then. So that made sense at that time. So it's not a bad way of doing it. It's probably not the most efficient, but if this is what you're able to do and comfortable with, then you can do it here. You see the cons there. It takes a lot of time. There's a lot of room for error. You know, you can type in a number wrong, and it's manual entry. So next, bookkeeping software. Obviously, this is the one that I'm going to recommend. It's probably not as intimidating as some of you might think that it is. I met with a client just today, and she has up until this year used spreadsheets to record all of her information, which was great. She was doing a great job. She was totaling everything. She had all of her receipts. She knew what things looked like financially. But it was taking a lot of time, and she had made some errors. So we moved into QuickBooks at the beginning of the year. And just this morning I met with her, and she said she didn't know why she hadn't started using QuickBooks several years ago, because she learned it that quick and is so, it's saving her so much time by using QuickBooks and being able to go look at reports. I think she probably pulls a profit and loss every day just because she can. So there's lots of benefits to this, especially if you're a farmer. If you can get past the technology piece of it, it will save you a lot of time. Maybe not in the beginning, but eventually it really will, and you'll appreciate the reports and things that you can get out of it. It's not just QuickBooks. There's all sorts of different software that you can use. QuickBooks is what we use. It's what I'm most familiar with, and it's what I recommend to my clients. Lot less room for error here, less time requirement, and there's all sorts of little features like digital receipts and things like that. It does come with a cost. So if you're a beginning farmer and you don't have a lot of extra to spend, that can be a deal breaker, and that's fine. Use Excel to start with, but just know that you can eventually move into something like this. There's the learning curve, of course, too, but it's really not too hard to learn. It's fairly simple, and there's so many tutorials and online help that you can YouTube anything now. So you can do a little QuickBooks course on YouTube if you needed to. So if you've decided that you want to move forward, you're ready to do some bookkeeping, what do you do now? You want to use QuickBooks? Do you want to use Excel, spreadsheets? What do we do now? We have to figure that out. The first step in your bookkeeping process is you have got to create a chart of accounts. So what the chart of accounts is that's going to list all of your accounts that you want to categorize everything into. So right here, you can see on the screen, that's a Schedule F. So that is the tax form for farms. If you have a farm operation, when you file your tax return, they're going to use a Schedule F to report the farm operation. So we know the IRS wants us to categorize everything into these categories for tax purposes. So when you're creating your chart of accounts, this is the simplest place to start, because we know we need these accounts for tax purposes. So it's going to be general things like I put some examples there. You've got car and truck expenses, chemicals, insurance, rent, feed, all that stuff. You definitely want to create your chart of accounts with those items. Then you need to, after that, you need to think about what information you need in order to make decisions on your farm. What is going to be helpful to you? How do you need to categorize things to where when you look at a report, when you look at a profit and loss statement, it's actually going to be informing you so that you can make a business decision. So I put, this is an example profit and loss, just so you can kind of have an idea. the information that you put into your bookkeeping is going to determine what you're going to get out of it. So in this example, you can look right there in the feed section. So feed would be on our chart of accounts. We're going to have an account there to where when we go buy feed, we're going to record that transaction to feed expense. In this case, the farmer didn't want to know just how much feed he had in this time frame. So if you look, we're looking at January 1st through March 31st. The profit and loss is over a period of time. It's giving you your income and your expense over a period of time that you choose. In this case, we're looking at the first quarter of 2022. So the farmer didn't want to know just total feed. He wanted to know how much specifically in pig feed. And so he set up his chart of accounts so that he could view a report and see that. So when he goes to the co-op or wherever he buys feed, he can record that transaction specifically to pig feed. You can see the same kind of thing down in utilities. Typically, you're going to record all your utilities as one, just utilities. In this case, maybe the farmer wanted to know specifically how much he's spending on water. You know, if you have crops, that's a big deal. So he's got that separated out. Maybe he just needs to know if he needs to drill a well, or if he's just spending too much, it doesn't make sense. So you have to think about the information that you're going to need when you're setting up that chart of accounts, and make sure that you create an account for those specific things. Up at the top, and this is like what we do at our farm, our income, we have that broken down by crop right now. Our farm is we're still kind of in growth and planning mode. And so it's important for us to know how much we're making on specific crops. And so when we make our sales to customers, we categorize it by each thing. So I know how much we sell in squash. I know how much we sell in strawberries. I know how much we sell in pumpkins. And I want it broken down like that right now. Eventually, we may not care, because we may be happy and we know that section of our business is healthy, and we may not need that little detail like that. But right now we do. And so that's how we set up our chart of accounts. And that's what our profit and loss looks like when we run it. Like you see here in this one, they've got hogs, retail pork, and produce. So that's informative to them to know each little aspect of their business and how much in income they have from each. So the profit and loss is going to be probably the first financial report that a lender is going to ask for if you need a loan. And that's what this is. This is what it looks like. There's another very important financial statement, and that's the balance sheet. This is an example balance sheet. The balance sheet is for a specific day. So it's not over a time period, it's a specific day. And the balance sheet gives you your assets and your liabilities. So how much money you have in the bank, how much inventory, how much you've invested in machinery and equipment, how much do you owe on loans or accounts payable. That's where your balance sheet comes in handy. That's a snapshot of your business on a specific day. That's a very important financial statement as well. So when you're creating your chart of accounts, you want to create some accounts for your balance sheet as well. So if you have 2 farm bank accounts, then you're going to have 2 farm bank accounts that you need to set up in your chart of accounts. And that's just, you'll figure that out as you go. And you can always edit that chart of accounts too. Just because you set up something in the beginning doesn't mean you can't add to it later. But you just need to be thinking about those basic things when you set that up, because the point is, when you start recording your transactions, you need to have that list of accounts that you're going to choose from when you record each transaction. Does anybody have questions? Does this make sense?
Actually, there was a question in the chat box. Has anybody used any farm-specific accounting software like FarmRaise, FreshBooks, something like that? Are you familiar with any of those, or know of anybody that has used them?
There are several, well, probably a few years ago, I had looked into some farm software because I was even wanting to maybe track things by weight for a certain time frame. I struggled, and this was a few years ago, but I struggled finding some farm software that was going to fill the need that we had. So I've made QuickBooks work for us. I would love to know if there's some farm software out there now. I haven't taken the time to look into it because I'm just comfortable with what we're doing now and I don't really want to change, but I would be more than willing to if it would give me the information that, you know, would be useful to us.
Poppy, maybe have you heard of any, or I guess heard of anybody having success or using any of that farm specific accounting software?
My impression is it can be helpful for very specific things. For the most part, specialized farm software is quite expensive and it's appropriate for large scale commercial farms. It's not cost effective for smaller farms. There's a lot to be said about getting QuickBooks or other mainstream bookkeeping programs set up appropriately for farm and ranch accounting. That's really its own whole multi-hour topic, but there are absolutely methods to get it to do what you need it to do without going to the specialized farm accounting. The one big exception I'll give you is that there are some CSA for community supported agriculture. There are some good programs that support that function. Most of them integrate with QuickBooks. And for those people that are doing inventory sales or web sales, there's some farm specific applications that are pretty good. But again, they usually interface with QuickBooks. So you wouldn't use that as your whole bookkeeping platform. You'd use it as an integration with your bookkeeping platform.
Got it.
There are several, I mean, QuickBooks does integrate with a lot of different apps. We use Square, and they talk to each other. There's countless apps that QuickBooks will integrate with. So I'm sure there's all kinds of solutions for farms, but I personally don't know of any.
Christine is asking if there's a monthly subscription to use QuickBooks. We talked about
There
this.
is, and I have some recommendations. If you're going to go with QuickBooks, I do have some recommendations. I think I have a slide on it here shortly, so I'll talk about that here in a minute. But there is a monthly subscription. It's very reasonable though. Is that everything for now?
Yep.
Okay. So one thing I want to mention real quick with the chart of accounts, don't go overboard. So I recommend in the beginning, probably your chart of accounts doesn't need to be more than 40, 50 accounts. You don't want to get so minute with that you're kind of defeating the purpose. So an example is office supplies. You just need to have a general office supplies category. We don't need to know how much you spend for paper or for paper clips, things like that. That doesn't matter. We don't want to pull a profit and loss statement and have a line item showing us paper clips. I have seen reports where they're just pages because people create an account for every specific item, and we don't want to do that. You want to combine the things that you can combine and only separate out the items and the accounts that are going to help you make decisions or help you with your tax return. So just keep that in mind. So this is just a little recap. You're going to have for your income and expense accounts, you're going to have accounts like livestock sales, produce sales, chemicals, feed, supplies, utilities, stuff like that. And then for your balance sheet accounts or your asset and liability accounts. And the reason these are labeled is because when you set up, especially with bookkeeping software, it's going to ask you what type of account is this? Is it income? Is it expense? Is it an asset? Is it a liability? So your checking account, inventory, accounts receivable, credit cards, all of those things are going to be asset or liability accounts. And those are the items that show up on your balance sheet. Okay, so we've set up our chart of accounts. Now, what do we do? You may have just written it down. Again, I recommend QuickBooks, but if you can't do that, you can't do it, and that's fine. Write it down on a piece of paper, put it in a spreadsheet. Somehow just keep record of all of your transactions and start maintaining them, start categorizing them, and use that chart of accounts to do so, however you're able to do it. Now we're to a point where we can start our bookkeeping. We've got our chart of accounts, so let's start booking some transactions. First thing is, if you already have a farm, if you're starting a farm, and this is for any business, but you need to have a separate bank account for your farm. Some people may have more than one, but you need to have a separate bank account of your farm income and expense through. Don't run it through your personal account. You don't want to mix personal and business. It's not that you can't, but it makes the bookkeeping that much harder. So get a separate bank account that you can run all of that stuff through. If you've got payroll and you're paying yourself, great. If you don't have payroll and you need money out of the farm account for whatever your personal expenses are, just transfer money to yourself. Don't use your farm account for personal expenses. It just makes things harder on the bookkeeping side and for tax purposes too. If you're using QuickBooks, you can connect your bank account to QuickBooks, and it'll talk every time a transaction hits your bank, it'll automatically come into QuickBooks, and it's just sitting there for you to review it and to book it. And it's super easy. Definitely do that if you go with the QuickBooks method. If you're using Excel, there are options to download your bank transactions into Excel. If you already have a spreadsheet going, it's probably not going to talk to that specific spreadsheet, but it still gets them in there. If you can figure out how to make that work, great, so that you don't have to manually enter the stuff. But it is just going to be a little more time consuming that way. Recording your transactions as routinely as you can. You know, weekly is great, daily is great. Farmers probably aren't going to do that. At a minimum, do it every month. So every month when you get your bank statement, you need to make sure that you have that prior month's transactions all recorded and you've got all of your bookkeeping done. The same goes for credit cards. If you have a credit card, you want to do the same thing. You want to record your individual transactions. And I'll show you what that looks like here in a second. A lot of you know you need to keep your receipts. You need to keep all of those records for a minimum of 3 years for tax purposes. A lot of them, you know, you go to Walmart and they give you a receipt. Those receipts fade over time and you can't read them. So if you can get some sort of receipt scanner, use it. And then you don't have to keep that paper and you don't need that shoebox. If you can't already tell, I'm really trying to get you to get rid of the shoebox. QuickBooks has a really nice digital receipt feature. So we'll look at that later, but that's also another benefit of bookkeeping software. I'm sure a lot of the different softwares have that same capability. Again, you want to reconcile your bank accounts every month. So until you have done your reconciliation, then you can't count on any reports that you're going to run or that you're going to total up. You need to reconcile that bank account. That's the only way to ensure that you didn't miss anything. I have a client that we were reviewing a prior year, and they actually paid too much in tax because they had given their accountant all their records. They had said, here's our profit and loss. Here's this. We've got everything done. We've recorded all of our transactions. Here you go. They didn't reconcile the bank account though. And so it turns out that they had actually duplicated some deposits and some income. And so they paid too much tax. I mean, their taxable income was a little too high because they had duplicated some income. So, you know, you don't want to do that. You definitely don't want to do that. You don't want to miss out on any receipt or any expenses either. If you forget to record a transaction or type it in wrong, type the wrong number, you don't know that you have all that stuff correct until you have actually reconciled your bank account. let's see, I think I have. Oh, I was gonna go, let me go, I was gonna do a little QuickBooks demo just to try to help you understand what the reconciliation and stuff looks like. Let me see if I can get over here. Here we are. They have, QuickBooks has a little test file out there that you can play with. You can go in there and do anything you want to do. Okay. So this is what QuickBooks Online looks like. Maybe some of you have used desktop version before. I don't recommend using that anymore. QuickBooks Online used to probably 6-7 years ago. It was awful. I wouldn't recommend it to anybody. But in the last 4 or 5 years, they have really come a long way. And I really don't recommend anything else. I like it. I also like the fact that you can have it on several devices. You have it on your phone. Everything's really at your fingertips at all times. So this is what it looks like. Let me go right here. When you connect your bank account, this is what that looks like. So it's feeding transactions right into QuickBooks. Right down here, QuickBooks is pretty smart. It's going to try to figure out all of these transactions as they come in, and it's going to do its best to guess where you want them to go. So it's going to give you the date. This is right off of your bank statement, by the way. So it's going to give you the date, who you paid, or maybe where the money's coming from. And then it's going to try to guess which category. This is your chart of accounts right here. It's going to try to guess which category you want it to go to. At first, when you start, it's too smart and it'll get on your nerves because it's trying to really be helpful and it's not. But once you start using it, it will really be beneficial and it will remember what you do with these transactions, and it'll become very automated and require very little time. So this is the basics. This is us booking a transaction right here. We're putting our vendor name in and we're putting in our category, whatever the category is. We'll say sales of product. I can't even tell. Yeah. And then you're going to book that transaction. As soon as you book that, move this over. As soon as you add right here, it is officially recorded on the books. So what your process would be is every week or every month, if that's what you're going to do, you're going to go through each of your accounts. So you would have your checking account, maybe a savings account if you have one for your farm, credit cards, you will connect them as well. You'll go through and you'll add all of these transactions where they need to go. And then the next step is your bank reconciliation, which is super easy. I'll show you what that looks like. So surely most of you know what a bank reconciliation is. I don't think anybody reconciles their checkbook anymore, but you should when you have a business. So what you're doing is you're looking at your beginning bank balance for the period. So let's just say we're looking at January. We're looking at our December 31st bank balance, and we're looking at our January 31st bank balance, and we're going to reconcile the two. We're going to figure out what happened, all the transactions. How did we get from the beginning balance to the ending balance? I'm just going to put a number in here. So this is what you would enter right from your bank statement. So it's February 5th, whatever, and we're going to reconcile January. What you're doing is you have your bank statement pulled up on your screen, or you have it sitting beside you. And all you're doing is going down here and you're checking off each transaction that was on your bank statement. You're going to make sure that you clear off every single thing that your bank statement shows. In the end, when you have all of your items checked off, this difference would be 0. That means you've reconciled. You haven't missed anything. Everything that ran through the bank, you have recorded on the books. That's where you want to be. You want everything there. When you're at 0, you know you've reconciled. The very last step before you finish your reconciliation is to look at all the items that you didn't check. Normally, there's not going to be any there. Normally, you will have checked everything off because everything recorded has run through the bank. It's all cleared. There are cases when if you write a check, you write a check in December, you're reconciling January, there's still that check sitting out there because whoever you wrote the check to, they haven't cashed it yet. So that's fine. That should still be sitting there. It hasn't cleared the bank yet. But if there's other things sitting here that have already cleared, that means you've probably duplicated a transaction, and we need to do something about that. That's when you would go dig into it and figure out, do I have this in here twice? Do I need to get rid of it? The same with the income side. That's how you find out if you have duplicated your income. So you get this to 0, you look at what's left, you make sure that all of the things that are left are reasonable, and then you finish. There would be a little option here to finish your bank reconciliation. Once you've done that, and you've done that for all of your accounts, your credit card, your checking account, then you can go run reports and actually rely on the information from those reports. If you have, I don't know how to get rid of this. If you go pull the reports before you reconcile, then you really can't rely on that information because you don't know if you've duplicated something or left something out. I'll show you some reports real quick. So here's a profit and loss. It's pulled it from January 1st to March 2nd. You can put whatever dates you want up here. So here's what their profit and loss looks like. Real nice. Hopefully they can make decisions based off of all of this information. They have all these sub accounts. The nice thing about QuickBooks, you can drill down on any of this. So if you're looking at job materials and you're thinking, what did I do? What did I buy? I can drill down on that. And it's giving me a breakdown of that whole total. Here's where the digital receipt feature comes in real handy. I don't think they have it in here, but if you had this transaction here and you're thinking, that's not what I bought from Hicks Hardware, that's not what that was. If you've scanned in all your receipts or taken a picture of all your receipts, there would be an image of your receipt sitting right here attached to that transaction. And you can look at it and see exactly what you bought. This comes in real handy when you go to Walmart. So for us, we've got a commercial kitchen. Of course, we've got an office. There's a number of things that we might go get at Walmart. So if a transaction from the bank comes through and it's for Walmart, I have no idea. It could be anything. I have no idea what it is. But if I have taken a picture of my receipt will be in here in QuickBooks, and I can look at it and know exactly how to categorize that specific transaction. I'll throw that receipt away. I don't have to keep it, because the good thing about QuickBooks is that it will always be there. As long as you have a subscription, if you have scanned in receipts, they will be there. When you end your subscription, they'll still be there for a time. I want to say like 1 year, you can go back and look at them, but you can export a file from QuickBooks that will have all of your receipts, digital copies of all of the receipts. So you don't have to keep the paper anymore. Right here is the receipt function. So you can get an app on your phone, the QuickBooks online app. And when you go to the store, buy whatever you're buying, go sit down in the car to leave, you can it's called Receipt Snap. You take a picture of that receipt, and that's all you have to do. Just take the picture. You don't have to do anything else. QuickBooks is going to automatically try to pull all the information from that receipt, and it would show up right here in this queue for you to review it. And then it's going to attach that to whatever transaction that you have recorded in here. Even if you haven't recorded it yet, it'll be sitting there to attach it to that transaction when you do record it. They haven't always had this feature. This is relatively new. They may have had it for a couple years, but it's really nice. Very useful. And I love the idea of, you can always export that file and have copies of all your receipts, and you don't have the shoebox. Okay. Do y'all want to see anything else in QuickBooks before I go back over?
There's a couple questions. So when you're buying items that kind of fall into two different categories from the same place, like, Lowe's. And you have, some of your your items that you purchased were for building supplies and some of them were cleaning supplies. How do you reconcile that in your accounting?
So I just pulled up an expense right here. You have lines. So this is Squeaky Clean Car Wash. They have it booked to automobile. You can keep this going as far as you want. So if this was Walmart and you had office supplies and you had kitchen supplies or whatever, you can break that down as far as you want to break it down. You put your category, you put your amount. In the end, the total is the total of the receipt. So you can split that all up as let me see if there's a transaction. Okay, so these are the transactions that are sitting here that came in from the bank. Trying to find one that doesn't have anything right here. You'll see this option right here somewhere to split it. You can split right here. So initially it's only going to give you one category, but once you click split, that's when you can break it down further. Anything else?
Yes. Would the emailed receipt be able to use it? Wouldn't the emailed receipt be able to be used in QuickBooks?
The emails, you can, I believe you can email a receipt. You might be able to actually, there may be like a specific email where you can forward the email right there, forward from email. Or if you have, let's say it's an Amazon receipt or something like that, and you have it saved to your computer, you can upload it directly from your computer. So there's several options. You don't have to take the picture with your phone. That's just usually the most efficient way to do it, because typically you just have the receipt right there in your hand when you leave the store.
There's another non-QuickBooks question. Is there an Excel template that aligns the Schedule F to that template, the Schedule F form?
I don't know. I've never looked into that. You can probably Google it and potentially come up with something.
Or create your own.
Or create your own. Yeah. I mean, I would just start creating my own, but you really might be able to Google something and find some sort of template that's already out there.
Lisa has a question. From time to time, we personally have to loan money to our farm and repay ourselves when we sell our product. QuickBook automatically considers it income, but how would you track that?
So you're gonna record all of those ins and outs that are personal things. So when you contribute money or when you pull money out, that all runs through what we call the equity section. So you're gonna have something probably called member draw or member distribution. It just depends on how your chart of accounts is set up. Let me see. When you put money in, I was going to try to do one. When you put money in, you can run it all through the same. You make or owner contributions. You just need to make sure that's running through the equity section. So the account type would be equity. This is taking forever to load, but I was going to see.
Ashley, can I jump in with a little bit of extra clarification here?
Yes.
If you're a sole proprietor, there's really no such thing as a loan to or from. It's all as actually saying equity. If you are a partnership or some other type of entity, it may be the case that you actually have a proper loan to or from the business, and you would set that up as a loan, but there's no reality where a loan is income. So if you set up a loan and it's being tracked as income, you've made a mistake in how you set it up in QuickBooks. But typically,
and if QuickBooks is automatically doing it, oh, sorry, I didn't mean to interrupt.
No, go ahead, Ashley. That was all I wanted to say.
If QuickBooks is automatically recording it that way, you may have accidentally set up some kind of rule that's available to do in here as well, but or it may just be doing it because the first time that happened, it accidentally got recorded that way. So once you fix it, or once you eliminate that rule, then you can move forward with it going to the correct account. But you can go in and fix them. You can go into your profit and loss and drill down on that income account and go in, click on each specific transaction and change it.
Ashley,
So I don't know why I would do this, but they're right here when I say equity. So this is your chart of the account type right here. So we've got income, you've got expense down here, and then you'll have some accounts that are in your equity section. And that's where you would have like an owner contribution or owner distribution or personal expenses, whatever it is. You're just typically it will run through that equity section.
Ashley, Frank is asking, would you put your personal bank account in QuickBooks too?
I would not. I wouldn't put the personal account in QuickBooks. You can, it's not, I mean, especially if you're wanting to just kind of keep track of your personal stuff, unless you use classes or do something to separate it. When you pull a profit and loss, you're going to have all your personal stuff in there mixed with the going to be able to tell one from the other. You can do it. You can upgrade your subscription to where they allow what we call class tracking. So you could class everything as personal and then the business stuff as business, but I would keep it completely separate.
Can I just chime in again here? Am I still there?
Yep.
Did you lose me?
You can hear you, yes.
So one of the, no, don't do it. And one of the reasons you shouldn't do it is, we'll talk about audit and tax in a minute, but if the IRS has a reason to audit your business, they have full access to your business accounting, but they have no reason to have access to your personal financial records unless there's evidence that you're not keeping the two separate, or that there's evidence that there's something going wrong. But if you do things right, all your private stuff should remain private from the IRS. So when you deliberately put it into the QuickBooks, you're deliberately creating all that other access to the IRS and also to a lender. They just don't need to know about date night and pizza and the movies and the kids' shoe sizes. Those are personal items.
I've always advised my clients, like if you're under audit and you're asked a question from the auditor, don't start talking. Don't get the word vomit. Only answer specifically what they're asking. Don't give them more information than what they're asking for. So that goes right along with what she's saying. Don't give your personal information. They're not asking for it. They don't need access to it. You could, if you're just trying to, the point of that is just so that you, like your personal finances, so you can see how you're spending, you could have a completely separate QuickBooks file and use that for your personal finances. And then have, you'd have a completely separate file for your business then.
Okay, that's what I was thinking more. Thank you.
Anything else right now? Nope.
Okay. Do you have anything else for us today?
Yeah, I'll wrap up. I think. I don't remember how much more I have. Talked about this. Cash. We need to talk about cash real quick. So we talked about reconciling bank accounts. If you, depending on your farm operation, if you're heavy in cash, that can be an issue. The majority of our customers pay in cash. So a lot of people think, oh, I'm not going to record any cash because then I don't have to tell the IRS and I don't have to pay the tax and all the things. One, tax evasion is a real thing and it's not good. Two, if you're trying to give a financial report to a lender to get a loan, to get a line of credit, if cash is like a big part of your business and you don't have it on there, you're missing out on that income. Your lender's not seeing that as income. Your business doesn't look as healthy because you don't have that cash, those cash sales recorded. For us, like I said earlier, we use Square. I run everything. All of our sales go through Square. So if they pay with a card, I mean, that is the reason we got Square in the beginning several years ago, is so that we could swipe a card. But I run all of our cash through there. If they pay by check, they pay through Venmo, whatever. So I can look at Square right now and tell you on any specific day how much money we brought in that specific day, including cash and all of it. Keep a log of all those cash expenses. It's really hard, if you have cash sales, just take all the cash to the bank, go deposit it, and try not to use cash to purchase items, because it's just harder to keep track of. It's not clearing the bank. If you don't keep that receipt, it's harder to keep track of all those cash expenses, but just don't forget to do it. And you want to record all that before you run those reports, because if you don't, they're not really accurate. Okay, we've kind of already talked about this, but sorry. Those reports, you can't look at your reports until you've got your bookkeeping strategy in place. The reports are going to tell you how you're doing financially, how you can make your business decisions. You're going to provide those reports to lenders. You're going to use them for all the tax planning. You've got to do the bookkeeping first. So you've got to get a strategy in place for that, so that you can rely on that information and be able to provide it to whoever needs it. So my recommendations, obviously, use QuickBooks Online. It's not that expensive. So it is a monthly subscription. There's several different versions. I think the most basic is called Simple Start. And I want to say it's around $30 a month. They usually will give you a discount like the first few months. And then it'll go to the regular fee. And they also give you like a free 1-month trial. So if you're thinking about using it, not sure, go do the free trial and try it for a month. See if you like it, and then do the subscription. I will say they do offer a self-employed version. Do not use it. The self-employed version is the cheaper version. I think it's like probably $10 or less a month. But it is geared towards people with different businesses, not farms. So with that version, you cannot customize the chart of accounts like we talked about. So we're not going to be able to have like all those Schedule F accounts, and we're not going to be able to create like, chicken feed on our chart of accounts with that self-employed version. So spend the extra and at least do the Simple Start, I think, is the most basic of the other types of QuickBooks Online. And again, if you have an accountant that you use regularly, they can usually get a discount for you. So you might check with your accountant before you set up QuickBooks. I give my wholesale discount to all my clients. But you do need to check with your accountant first before you set it up, because if you set it up, you won't be able to get the discount. Again, have a separate bank account for all your business, all your farm transactions. Don't try to run it through the same account with your personal stuff. It makes the bookkeeping harder. You can't reconcile the account. Just go set up another bank account. Usually you can get an account with no monthly fee probably. So do that. If you're going to farmers markets or wherever you're selling your items, or whatever your operation is, if you're using Square or whichever point of sale program or software that you're using to run cards, they usually have lots of features that come along with them. Square, like I said, we have set up so many items in there so that when our customers check out, I put in, okay, they're buying this much in corn, this much in tomatoes, this much in squash. Take advantage of all the features of that software. It's free. Square's free. You pay when you run a card, but all the other features are free. You can even set up like an online Square store. There's lots of different features. So I would take advantage of those things.
Ashley, I have a question for you here. When you use Square and you do those kinds of sales, are you able to check when items are subject to state sales tax?
I don't think that Square, like, can give you that information, but you can set the item up. Like if you know that sales tax applies, you can absolutely set that item up in Square to where it will automatically calculate the sales tax and charge the sales tax on the transaction. And then you can run a report every month that just gives you your sales tax numbers. So when you go and you're ready to do your sales tax report, it's all right there in Square. Which another reason.
And the same is true with QuickBooks, right? That QuickBooks, you could also, so if the sales tax is charged on flowers, but not on food, then in QuickBooks or in Square, you'd set up the flowers as subject to sales tax. The food is not subject.
Yes, correct. And Square talks to QuickBooks. That's an app that integrates with QuickBooks. So you can set all that up to where all the transactions in Square come through over to QuickBooks. And then QuickBooks tracks sales tax. So it can all just be right there when it's time to prepare that sales tax report. You go run the report in QuickBooks and there you go. You're ready to just throw it in there on the ATAP website and file it.